On November 27th, the heartbeat of the global financial system skipped a beat. The CME halted silver trading mid-session, claiming a cooling failure. They called it a technical glitch, a software error, but for those of us who track the flow of real metal, this was a code red warning signal. It wasn't a computer error. It was a liquidity crisis. Reports suggest the world's largest banks sold 250 million ounces of silver they simply did not have. For decades, the paper market has controlled the price. But now, a major entity, a whale, stopped playing with paper and demanded physical delivery. This brings us to the $59.65 all-time high and Bank of America's sudden, frantic forecast of $65 by 2026. But I'm here to tell you that $65 isn't a target. It's a desperate attempt to cap a price explosion that threatens to break the COMEX exchange entirely. We are witnessing the second greatest setup in history. But unlike 1979, this isn't about two brothers cornering the market. This is about survival. Because when the supply runs out this time, it's not just investors who suffer. It's the industrial engine of the entire modern world that stalls. Let's look at the math. In 2021, the COMEX vaults held nearly 130 million ounces of registered silver. That is metal available for immediate delivery. Today, that number has collapsed to under 30 million. That is a 78% drainage in just 4 years. The buffer is gone. To put that in perspective, industry consumes 700 million ounces a year. 30 million ounces is barely enough to keep the world running for 2 weeks. 2 weeks. If a panic starts on a Friday, the vaults could effectively be swept clean before the Asian markets open on Monday morning. The London Bullion Market Association recently used the term state of seizure. In medical terms, that means the patient is dying. The system is locking up. Look at lease rates. Banks are paying 39% annualized interest just to borrow silver for a few weeks. Why would they pay credit card rates for metal? Because they are trapped in a short squeeze. They sold promises, and now the contract holders want the metal. They are borrowing to prevent a default. November saw inflows of 15.7 million ounces. This isn't retail investors buying coins. This is sovereign wealth funds draining the wholesale market. We are seeing a migration of wealth. The smart money saw this coming in March. They realized that the physical inventory data didn't match the paper price. Total ETF holdings are now at a record 1.13 billion ounces. The last time accumulation hit this velocity was 1979, right before the explosion. But here is why this time is different. In 1980, you didn't need silver to run the economy. Today, you cannot have a green future without it. Solar panels are doubling in efficiency and production. Silver is the most conductive metal on Earth. There is no substitute that works as well. Electric vehicles use nearly 3 times the silver of gas cars. As EV mandates kick in globally, the automotive sector's demand is tripling. These aren't market trends, they are government laws. The Inflation Reduction Act and the EU Green Deal force manufacturers to build these technologies. Think about it. If you are Samsung or Tesla and silver goes to $100, do you stop making cars? No, the silver in a car is a fraction of the cost. They will pay any price. Demand is inelastic. Whether silver is $30 or $300, Apple needs it for iPhones and the military needs it for missiles. Speaking of the military, aerospace and defense are massive consumers. In a geopolitical crisis, silver becomes a strategic national security asset. This inelastic demand is colliding with a structural deficit. We have burned more silver than we mined for 5 straight years. Projections for 2025 suggest a deficit of up to 215 million ounces. That is the entire annual output of Mexico and Peru combined, simply missing. And now, AI. The massive data centers required for artificial intelligence need premium connectors. Silver is the blood in the veins of the AI revolution. Economics 101 says when prices rise, supply increases. But in the mining world, that rule is broken. The supply is stuck. It takes 10 to 15 years to bring a new mine online. You need permits, environmental studies, infrastructure, and community approval. Because silver languished at $18 for a decade, no one invested in exploration. We are now paying the price for 10 years of underinvestment. Even with silver at $60, you can't just flip a switch. Governments in South America are nationalizing resources or blocking permits. And the geology is working against us. Ore grades are falling. We have to dig up more earth just to get the same amount of silver we did 10 years ago. This means supply is essentially fixed until 2030 or 2032. The price can go to the moon, but the miners cannot move faster. So we have a fixed supply meeting an exponential, legally mandated demand. This is the definition of a supercycle. Skeptics say recycling will save us, but electronics are getting smaller. It's harder and more expensive to recover silver from iPhones than old photography film. This brings us back to Bank of America. Why did they release a $65 target? Banks are usually conservative. They hate volatility. They released it because they can no longer hide the math. Their analysts see the same empty vaults we do. The $65 target is a signal. It's a signal to their wealth management clients. Start buying now. It provides cover for pension funds to enter the market. Once BOF-A goes public, CD followed with $62. Then UBS. This is herd mentality. No bank wants to be the one left without a seat at the table. But there is a darker possibility. Are the banks going long because they know the short game is over? Are they flipping their position? Remember nickel in 2022. It went from $20,000 to $100,000 in 48 hours because a Chinese tycoon couldn't cover his shorts. Silver is a bigger market, but the mechanics are identical. If a major bullion bank cannot deliver 50 million ounces, the market goes bidless. Bidless means there are no sellers at any price. The price gaps up. $60, $80, $100. In minutes, not months. Adding fuel to this fire is the Federal Reserve. We are approaching a critical decision on interest rates. Markets are pricing in an 89% chance of a rate cut. When rates fall, the dollar weakens. When the dollar weakens, silver flies. With talks of new dovish leadership at the Fed, we could see a return to aggressive stimulus. More money printing means less purchasing power. History proves that when faith in fiat currency wobbles, capital flees to hard assets. Silver is the most undervalued hard asset on the planet. The gold-to-silver ratio is historically high. If silver just plays catch-up to gold's recent moves, we are looking at $85 without any squeeze. Then there is the China factor. The Chinese New Year is approaching. Historically, Asian demand surges 40% during this period. China has been draining the Shanghai Gold Exchange. They are importing silver at record rates. They are hedging against the dollar. So we have the Fed meeting, options expiry, and Chinese New Year all hitting within a 30-day window. It is the perfect storm. We saw what happens when supply chains break in 2020. People don't buy what they need. They buy what they might need. Industrial buyers act the same way. If Apple fears a silver shortage, they won't buy for next month. They will secure contracts for the next 3 years. This hoarding creates a self-fulfilling prophecy. The more they hoard, the scarcer it gets. The higher the price goes, the more they hoard. Look at palladium. It never went back to its old lows. It reset at a higher level. Silver is facing a permanent repricing. Retail investors are the last to know. By the time CNN covers Silver Mania, the premiums on physical coins will be 50% or more. Paper price might say $60, but try buying physical metal. The disconnect between paper and physical is about to become a canyon. We are in the final grain of sand. The COMEX is empty. The miners are tapped out. The industry is thirsty. Bank of America's $65 target is not a ceiling. It is a floor. It is the starting gun for the race to real assets. Crisis creates opportunity, but only for those who move before the herd. The window to position yourself is closing. Those who bought at $30 have doubled their money. But the move from $60 to $120 happens much faster than the move from $30 to $60. This isn't about getting rich quick. It's about wealth preservation in an era where paper money is being printed into oblivion. Silver at $59.65 is history. The future is unwritten, but it looks shiny. Don't be the exit liquidity, be the smart money. In the next video, we will look at the specific inventory tripwires, the exact numbers that signal the final collapse of the paper market. Thank you for watching the video. Please like and subscribe to update our latest videos. Thank you.